Welcome, guys. Welcome to this live trading section. Wow, it's amazing seeing you guys on board tonight. I can see viewers from United States, from United Kingdom. Wow, 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 that's good. I can also see some new viewers, some of our subscribers, some of our VIP students. You're all welcome, guys, tonight. Well, I don't want to waste much of our time tonight. I just want to jump straight into what we are here for. And I'm going to be teaching you one of my biggest or one of my magical trading strategy tonight, which is how to trade break of structure using the retest trading strategy. Break of structure also means the same thing as BOS. They are the same thing. And I think you have also wondered, when I started trading earlier, that was some years back right now, one of my biggest mistakes has always been anytime I see a breakout in the market, I jump in straight to the breakout and eventually find out that it was a fake out, not a breakout. I think you have made such a mistake for, let me illustrate to you better. You saw a market just breaking out with maybe a bullish engulfing candlestick. Let me describe it to you. Maybe the market has been going this way and just boom with the bullish engulfing candlestick. I'm like, wow, the market is going up. You just jump in, bam. And then you jump in. The next thing you see that the market just started going down, coming down, coming down. And then you jump out. They're like, wow, I'm already losing money. Just to avoid me losing multiple. Immediately you jump out, the market start going up again. Has that happened to you before? Yes, if that has happened to you before, we're in the same ship. That was the exact same thing I was battling with in my early days of trading. And by the grace of God and the power of knowledge, I was able to crack the code and find out, wow, this has been a mistake. And I was able to crack the code and become profitable. As a matter of fact, the one I'm sharing with you guys tonight is one of my biggest trading secrets. Biggest trading secret. Anytime I was enter a trade is one of the things I use as okay, is this validated? If yes, then I enter the trade with confidence and I've become much more profitable over the years. Don't worry, I'm going to take you guys through a lot tonight, both the theoretical part, the practical dimension of it. We're going to test it live. We're going to go into the market and test and see how this work live. So let's go to the theory part of it so that I have a fundamental knowledge of how this really works exactly first before we go into the main section tonight. So guys, what we'll be learning tonight is in this video, we learn about what is break of structure and how to identify it, what is retest and how to identify it, the major point to expect break of structure in the trading or in the market trend, and how to identify valid and invalid break of structure, how to trade with this strategy, how to set your entry, your take profit, and your stop loss. And I'm going to practical dimension of it also and give you free signals during the practical section. For those of you who are live right here, you can actually take the trade I'll be giving you tonight and make money on it as my gift to you. Then, on the other hand, we'll show you some KCA offers we have for those who may be interested. Tonight, I hope you are glad. So just sit back, relax, get a cup of tea or a cup of coffee, and let's dive into it. Before we go further, if you have not hit on subscribe button, please subscribe to our YouTube channel so that I can keep getting valuable content like this from us time to time. It's going to be practical tonight. Let's dive into it, guys. All right, what is break of structure? In trading, a break of structure is also the same thing as BOS. So anytime you see BOS, it's also the same thing as break of structure. Signifies a change in the established trend pattern. For instance, let me draw tonight. I'm going to be using a lot of drawing. Let's assume the market is going this direction before. Market is just on the ranging direction. And immediately, boom, something pump up. Maybe a candle either with a bullish engulfing candlestick or something just pop up immediately. That's what we call a break of structure. The established trend in the market before was initially a ranging market or a sideways market, and a break of structure occur. That's part one. Number two, we can also have something like this. Maybe the market is coming in a downward direction before, and immediately, boom, it turns the upward direction. This is a downtrend established already, and what caused this uptrend is what called break of structure. That means it's just like the name sounds. It means the current structure or the structure that has been maintained was broken. So, or for instance, now we have a bullish trend, the market going in this direction before, and immediately the market just going like this, bam, a candle comes down, break down, and immediately that candle breaks. This is the current trend, this is an uptrend. This break of structure has actually broken the established structure here. So we have what called BOS here. So call this BOS. That means the established pattern in the market has been broken, and that's what called break of structure. So there's an established trend, and there are three different trends in the market. Don't worry, I'll still explain later on in the video. We have the sideways market, we have the uptrend, and we also have the downtrend. I will explain better in the course of the video. So whenever that occurs, we call that break of structure. And in most cases, break of structure may not even occur the way we think, like with a bullish engulfing candlestick or a bearish engulfing candlestick. Assuming a market is in this direction before, when there's a pump up like this, we call this a bullish engulfing. Maybe it's one candle, a bullish engulfing candlestick, and if it's downside, we call this a bearish engulfing candlestick. This is a bullish engulfing candlestick, and this other one is a bearish engulfing candlestick. So that's what we call it occurs that way. And at times it also occurs this way when a market is coming maybe in an upward direction before. I get me, and the market can start forming multiple candles towards the downward direction. It may not be a single candle that will break the structure. It may be at times multiple candlestick towards the downward direction. Do you get my point? Maybe it's on the upward direction and it can start forming. And what actually validates that is when the next candle that formed started closing below the current close of this. This was the opening of this. I get me. The market started coming down to change the trend. So we call that a change of trend or a break of structure just occur in the market. So that's part one of it. So that's our break of structure occur. So you know, understand what break of structure right now. Let me show you in a picture format so that you can see what I mean by break of structure. Imagine this right now that we have on your screen. Imagine this picture you have in here. We have an higher high here, and immediately a break of structure occurs. We have an high here, a higher low here. She gets the market, which means is in an upward direction. Then when this come up, we call this. That's why you see BOS here. A break of structure just occur to form another high. Are you getting me? To form another high. So break of structure is like the current high has been mitigated or has been broken to form another high. Or maybe there's a downward trend, then in the market see here also, you could call this a break of structure. The market was initially, see now, the market was on an uptrend, then this occur, breaking the structure downward to downward direction. Are you getting me? I hope you guys can get what I'm trying to explain tonight. Let me draw more to show you more patterns so that you can get it all and full tonight. Let's assume, for instance, now the market is going, the market is going this direction before, an upward direction before, and immediately, boom, something comes down. It has broken the structure, and we have two ways the market move. We have the sideways market. We also have the uptrend and the downtrend. Here you get. So if the market broke towards the uptrend, we call it, when market is an uptrend, when it breaks down, it creates a downtrend. When it's an uptrend, when it's a downtrend and it breaks up, it creates what? An uptrend. So there are two ways. Either there is, let's assume the market is this way. The market is this way, and the candlestick and the market has been ranging in this column before. I get me. Is it that touch up, come down, shake it? Then immediately you can this is a sideways market right now where you are using your resistance. You know, this is the resistance line, and this is your support line down here as a support here, shake it. So when the market breaks above this, we call this a break of structure called above the resistance level. Are you getting me? You know, resistance can actually be either in a vertical format or in what's called an horizontal format, maybe in a trend line format. So this is a break of structure going here, and it comes down here, a break of structure as well when it closes below this. So that's a break of structure occurring right there. And we can also have it in a trend line format. This is a trend line. Here you get. So this is a trend line here. If it breaks down here, this is the support on the trend line. This is the support on trend line. This is the resistance on trend line. Can that break above your break below here? So in a nutshell, what break of structure does that? It actually clear the support or break above the support or above the resistance, either on an horizontal market format, maybe a horizontal trend line, that's the support and resistance, or the other way around as well. So let's get into the business the more so that I'll explain how to identify it. This is how to identify it already. Identifying break of structure, you can see this is a break of structure. This is a clear break of structure here. One here, this is a clear break of structure here. You can see another one here, a clear break of structure here as well. So that's how they will take you into the market and show you practical terms how we can identify and see break of structure. So let's get further, guys. So what is retest in trading? Retest occur when the price action return to a previous broken support or resistance level after an initial breakout. Now, this is what we call a retest. Let's assume the market is going towards action 4. Are you getting me? This is the trend line here, stand as a resistance, and a trend line here serving as a support. And the market break out as it is right now. When it returns back to this resistance that I just broke out from, we call this a retest. So this point, when it returns back to this point, is called a retest. Assuming it's in a downtrend market, let's assume it's a downtrend. The market is coming this direction in a downtrend. I get me. You know, this downtrend, and the market broke down a little here. I get me in this downtrend. I'm sorry. You know, we're in downtrend. Sorry, it broke up. Let me draw this again. We have this, and the market break above this. She gets when it comes down for a retest. Then this is what we call a retest that's broken above the resistance. Sorry, it was resistance we explained earlier on. Okay, now we're explaining support. Don't mind me, I made a mistake. It's support we're explaining right now. So if the market breaks below this, I get me, break below this now, come down a little, and return back to the support line now. This is what called a retest. What we call here, the return is what called a retest. He's trying to retest, and the purpose of the retest is to validate either that break of structure was true or not. Do you get my point? If you are getting me, say yes. Just go to comment section, press yes. We are with you, sir. Yes, we are with you, sir. Yes, we are with you, sir. Let me have a multiple yes. Yes, we are with you, sir. I can see you guys. All right, let's get that done better. Yes, we are with you. Yes, we are with you. Yes, we are with you. All right, thank you guys. So you get what I mean by retest right now. This can occur in different ways. What I told you is that we have trend line and we also have the vertical format or the horizontal market, sorry. Either a trend line in the market or the horizontal formats in the market. So these are the two ways. So at times also we can have this retest occur. Let's assume this is the market right now. The market has been going up, coming down, going up. If we touch the resistance, bounce back, following like that, then make the market bounce out. You see this bounce out, right? So we call this break of structure. Coming down back to this line it just broke above, we call it a retest. You get? So returning back to that basis is what called a retest. This is the line the market just broke out. Returning back to this resistance point is what called a retest. So now, what this retest purpose is that? This retest is to validate either this break of structure is true or not. Are you getting me? This break of structure that occurs here, this retest want to validate if this now eventually come to this resistance and break below. Not just break below. Understand two things. Number one is that if it break below, are you getting me? Number two is that if it close below, even though it breaks below with a wick, are you getting me? And it didn't close below, it's still validated. It closed above that trend. If the market closed above that trend, it's still the break of structure is still there. But if it breaks below and close below, automatically that break of structure it's invalidated. It's already wrong. Don't worry, I'll show you in the picture format so that you can see how this means. So let's go further, guys. Let me show you the retest. Let's see, for instance, here I have two pictures here that explain better on that. See here right now, we have a break of structure downward. The market just broke the structure downward here. See the picture here. Then went back to that same resistance level for a retest and close below back. It didn't close above it. As it close above it, it is a downtrend direction. As it close above it, automatically it will be invalidated. But because it closed below it, the trend continues. So we have two things that happen after the breakout. After you have a breakout, a retest, the next thing is what? Continuation. So you enter at the retest level, not at the breakout level. The mistake I used to make when I started trading earlier, or newbies used to make, is that we enter when you see the market breaks out like this. Right now, this is a breakout here. You enter immediately and start following the trend, and eventually find out that the market comes down for a retest for the continuation pattern. So the market will just take your money and make up the day. Do you get my point? So this is a perfect retest here right now. You can see a perfect retest here. This is a retest. This is a retest here. This is what we call a retest in a break of structure. This is in a downward direction. This is an upward direction. And after a retest, the next thing is continuation of the trend. So the market will now start going into that initial place it was going initially. You know, the market was an uptrend, breakout. I get me. Came back to retest, and after the test, immediately the test is validated. Then the market will continue. So the uptrend continue that way. So don't forget this, guys. No matter how, never forget this in your trading journey. So that's what called. That's how to identify a retest in a trade. You can see it. You can screenshot this. You can screen grab this and keep reviewing it time to time to understand. This video is not what you watch once. It's what you watch multiple times to get what I've explained over the time. So now we have major points to expect BOX in the market. Number one is that BOX means break of structure. Number one is an uptrend market. There can be a break of structure again towards the upside so that the uptrend continues. Don't forget that. Break of structure does not occur just to invalidate trend. At times, it also occurs to validate a continuation of a trend. Let me explain that better, guys. Let's assume in this market right now, we have an uptrend ongoing. The market just boom, pump the upward direction. Are you getting me? That means you want to go higher. It can come back for a retest. Are you getting me? Retest here again. Are you getting me? When retest here again, continue again higher. Do you get my point? So this can happen, and it can also open on the other way around. We can have something like this. The market breaks below. This is an uptrend before. I get me. The market breaks below and go back for a retest to continue the downtrend, validating this coin downtrend. Do you get my point? So it can happen in either of the way. At times it doesn't actually happen just to validate that the trend. At times it happens to validate that the trend continues, and at times also happens to validate that the trend is ending. So you get, so it happens in different direction, in different ways, and in different formats. So that's on break off structure. So that's an uptrend. So it's either happen continue the uptrend direction, or happen to what? To change direction of the trend. So we also have what we call the downtrend. This is what we call downtrend, when market is going down. When you can draw a trend line, all you see is that it's pointing towards the downward direction. So we have that downtrend. And we also have what we call the ranging market, when the market is just moving within a line, within a space. It's not going up nor coming down, and that's a result of low volatility. When the volatility is low in the market, we call that a downtrend market. I'm rushing through the theory part so that I can go into the practical and we have a good time together. So that is that. So let's get further in the journey. So we can see here, this is a picture illustrating that this is an uptrend, this is a downtrend, and this is a sideways market. The sideways market is also called as ranging market. So you either call it sideways market or you call it the ranging market. I hope you guys are following me. Please, if you are following me, let me know. I'm following you in the comment section below. I'm following you. Or let's do it this way. Everyone of you, give the video a like button. Give it a like button. Just press on the like thumbs up. Give it a like thumbs up. That, sir, you're doing well. Thank you so much for the class. So this is an uptrend market. This is a downtrend market. I also have this here. You have this uptrend. You have this ranging market. I also have the downtrend market. This is how the market structure actually works. Don't worry. Maybe one of these days we'll find out time to take a video on market structure, which I believe is going to help you guys a long way and a long way in your journey. So let's continue, guys. So we have that being said and done. So now let's go further by explaining. We are done with the trends. Explain 3 ways to identify valid and invalid break of structure. What are the ways that I can, okay, this break of structure I just saw right now in the market is invalid or it's valid. So how can you identify the valid, the invalid, and the valid break of structure? That's what I'll be explaining next in this chapter. So let's go into it, guys. So now let's assume you have, there are 3 ways you can establish that. Number 1, via the candlestick. Number 2, volatility. Number 3, retest. Retest is the primary strategy we are using here, but I'll explain the candlestick patterns, you also the volatility and the retest pattern. So now let's assume this is the market ongoing right now, and we have a break of structure towards the uptrend. How do you know that this break of structure is valid? You can use the candlestick format, and how do you know that the body of the candlestick will close at least halfway, if not if not more than halfway, if not 75%, at least 50% of the candle. Do you get my point? This is what called the body of the candlestick. You know, this is a candlestick. This point right now, this box that form around is what called the body of the candlestick. I guess that's the body of a candlestick. You get my point? So this is the body of the candlestick. So now, what I want to be sure of is that the body of the candlestick, this is a candlestick right now. Did it close at least maybe 50%? That's half the candle. Are you getting me? Or 75%, maybe somewhere above here. Or if possible, let it even close where the highest point of the market goes to that day. Here you get. So those are the ways that you can identify. But in a situation whereby you have, maybe this was the candle that created the break of structure, but the candle closes something like this, forming like an inverted hammer. This is automatically invalid break of structure. Or maybe the candle right now, this is the candle that created the break of structure, and the candle closes something like maybe somewhere below like this. This is actually an invalid break of structure. When you see something like this also, maybe the candle closes something like maybe something like this. This is the candle that forms, and this was the green candle. Are you getting me? And it's not back to form a red candle. It's come back down. This was a bullish candle before going up, and immediately followed by a bearish candle that even engulfs the bullish candle that goes up. Automatically, these are invalid what? Break of structure. Do you get my point? So you are seeing right now. So the candlestick also have a whole lot to say that the break of structure was true or not, or either it's fake or not. Are you getting me? So you have to first observe the candlestick. How do you identify? Maybe in a bullish trend right now, how do you identify that the break of structure was true or it's actually right? Is when you see maybe the market. Let's assume right now the body of the candle closes like this in a green pattern. I get me? This green, this is a bullish candlestick and close very high. It is well full. I get me? So you can call this valid, or at least halfway. You can call this valid break of structure. So you can call it a valid break of structure in a candlestick format. And on the other hand, also maybe in a situation whereby it's not it's not just one candlestick that break the structure. You have multiple candlesticks. You have to be sure that at least you have consecutive bullish candle going up and an upward direction with at least a high volatility. Do you get my point? So that's that case. So let me explain the volatility pattern of it. Is when you see a candlestick right now. No, you're still going to go to the market. I just need to explain this. Maybe this is a candlestick right now going, and you have a bullish. This is the volatility. We are working on part 2 right now. The volatility, you see a bullish momentum up and immediately come back in a little and keeps going up. That's a high volatility. A high volatility when the momentum is high, not that the momentum is low, not that a market just break structure right now and keep playing in one spot. That's not high. This one can actually turn down back. I get me. So the volatility must be very, very high to validate that okay, this is a real change of structure, a re-break of structure. That's number 2. Number 3, way to validate is through a retest, and that's the main strategy you have been working in here. When you have a retest coming back to where the market just broke the structure, a retest coming back when you have market like this, and you have a retest. So this retest will validate. If this retest close below, this is invalid. But if it close above, it's actually valid. That's another way to identify. We also have the third way to identify is when this is coming down and you have maybe boom up. Sorry, I say we have another way. We need I'm talking about the test strategy, but I'm explaining about the downtrend direction. When the market is in a downtrend, the market is in a downtrend, and yet it breaks above, I get me, then retest it back, I get me, and keeps going up again. That's another way. So the retest strategy is one of the valid way to identify a genuine break of structure. So let me show you by picture the 3 ways. You can see right now, this is the candlestick. We have the candlestick here. This is the body of the candlestick here. Let me show you the body. This is the body. This is what called the body of the candlestick. This is what called wick. This is what called wick. This is what called wick. This is what called body. This is the wick of the candlestick. And this is how to identify. See here, I draw there's a picture here showing you a fake breakout. You see right now, the market just closes above with 3 candlesticks. I get it signifying a break of structure. But when it comes down for the retest, it actually break below and start going downward direction. This one that closes below that I mentioned earlier on. When the market closes below, then it has invalidate that break of structure. Now see on the other hand here, we have the market going upward, the same market going upward here, break the structure right here. I get me. Came back for a retest. After the retest, then the market moves upward direction again. So which means this is a genuine. So the major thing that actually validate this break of structure was the retest. So I have 3 options like I told you earlier on that I can use to validate break of structure, but the one I can trust more, that I can tell you that I can trust or you can capitalize on mostly is when you have a retest. And that's why we are taking this class. Don't forget, I told you one of the mistakes I make in my early days of trading was that immediately after a break of structure, you jump in, and when it starts going down, you jump out. And by the time you see that market I just jump out of right now start going up again, and find out you have lost a whole lot. So that's how to validate a real and a fake break of structure. Now, the last part is how to trade with this setup. Now that we have explained everything, we need to explain to you how you can trade with this setup, how you can take your entry, where to enter the trade, where to set your TP, and where to set your SL. So now let's assume this. I'll keep using this strategy. Let's assume, let me draw a market trend back for you guys. Let's assume this is a market. This is the resistance line. This is the support line. We have the market ranging like this. And immediately the market breaks below. Let me use the below strategy here right now. And it came back for a retest here. Are you getting me? And after this retest, you are sure that the market form a bearish. You know, this is a downtrend. Form a bearish candle. It keep going down again. Check it. Then, after you have seen that it has hit this line and it didn't close up below it, check it. And wait for the following candle, not just the first candle that used to hit the line. Wait for the second candle and see how the second candle reacts. If the second candle continue the continuation of the trend, I get me, then enter. So you are entering at the retest level. I get me. After the second candle, you see the formation of the second candle, not the first candle that formed the retest, because the second candle, after the one that touches that line, that support or resistance line, can actually go ahead and start going up again. She get the second candle can actually break low and deactivate the retest. I get me. So wait for the second candle. Immediately you see that second candle closes the same condition of the trend. I get me. Then enter. Now, where will your SL be? Your SL will be the preceding resistance. If it's a downtrend market, it will be the preceding support. The next support line here will be your take profit. That's where your take profit. Why the next resistance line here will be your SL. Do you get my point? That's in a downtrend market right now. Let me draw this very well for you guys so that you can see it. I just have something like this. I have something like this, something like this. Is the market going this way? Then after then, I have a break of structure downward. I get me. I have my retest here. So at this point of retest, when I see the second candle form, after the one that touches this line, then I enter. This is my entry. I get me. Then the next support, no, this is a downtrend market. The next support here will be my take profits. Find out where the support is. That's my take profit. The next resistance, this may not be the resistance, maybe the resistance here. The next resistance here will be my SL. Do you get my point? So what we are using in this strategy is that we use the next support, the next resistance as our take profit and as our SL. So you need to understand what support and resistance is. If you don't understand what support and resistance is, check one of our videos. We have a video already on support and resistance. Check the how to trade technical analysis. We have the video already, and we're still going to do another video. Check our channel. You're going to see another video already on how to trade with support and resistance. There's a video already on the page. We also have one initially, but that one may not break it down. We have another one already that talk about support and resistance live and direct. Support and resistance for you. So you can check the support and resistance video on the platform how to trade using support and resistance. Check the video, it will explain better to you on how to get this done. So it explains to you how to set stop loss, take profit, and you can understand how to identify major support and resistance in the market and how to trade with it as well. So check the video, it's going to help you a long way. And possibly we will drop the video in one of the description box below, in the description box of this video, so that you can get to understand it better. So you understand right now, the next resistance level will be, if it's an uptrend, the next resistance level will be your take profit, will be your TP, and the next support level will be your XL. And the retest place, where the retest to place, will be your entry. Do you get my point? But in a downtrend direction, the next support level, the next support can do will be your take profits, your TP rights, and the next resistance level will be your XL, and where the retest will call will be your entry. Do you get my point? So that's how to do that. And I always advise, most times, let's assume that let's assume this maybe $3, 3.0 is where the market is here, and this is the retest level. And this is the what's it called? The resistance level. And it's in a downtrend that you're trading. I always advise that you set your stop loss, at least take 1.1 out of there and make it 2.9. Don't make it the exact 3.0. Or in most cases, that's if it's in a take profit, but if it's a stop loss, increase it by 1. You can make it maybe 3.1. Because the market may actually touch that resistance level and keep going in the same direction, but actually get. So just add like 0.1. I get, if it's in a take profits, remove -1. If it's in a stop loss level, remove like add 0.1. I get me extend it like 0.1 a little. Wow, this is a whole lot. I'm explaining this video. I know some of you guys, some of you may not be able to assimilate everything all at the same time. Well, it's fine. So this is another one explaining better on what I just explained right now. You can see that our stop loss is somewhere here. I'm seeing it right now, not at the support zone. We make it a little before the support zone, and our take profit not even exactly at the resistance level here. We make it a little before the resistance level. She gets just remove a little, because at times the market just go to that line you are targeting, because when people are targeting that line and create something and never even activate it, she gets. So just remove like 0.1. You can see here, this is where the retest occur. This is where the break of structure occur here. This is the retest here, and the retest was the entry here, and this was the take profit here, the next resistance level, and the next support level was what? The stop loss. You see it here, clear cut. So that would help you better. This was the breakout for the last time. This was the breakout here. This was the entry here. I get in this breakout. This is the entry here at the retest level. Immediately market bounce back. Then we have the take profit above it. We have our stop loss below it. So just a little. We didn't set stop loss exactly at the support level. We made it a little before it, and the take profit wasn't exactly at the resistance level. It was a little before it as well. So you get, in case the market want to test the waters or just want to activate and take a lot of stop loss and continue its trend. Let's open Bybit. I have a Bybit account here. I also have a Binance account here. So let's open this Bybit account and let's take this as a practical. Though there's no money here, but there's load of boom. We have this load of boom, boom, boom. So now, guys, let's see. This is I think we can see one very clear here right now, very, very clear break of structure and a downward trend. So let me draw it out so that I can see this. See, the market is here, it's already going in an upward direction. See here, it's all upward direction. I get me. It was all upward direction. The market was moving towards the up. Then this candle here, see this magical red candle here, this red candle here was one that created the break of structure. It went back, boom, came down, break the structure downward, showing a downward direction. I get me. Immediately show a downward direction, then went up this line. This was the retest. This was the guy that created the retest. This was the major trend line. It was like the major resistance line. I get me. This line was major resistance line. So this guy came downward. I get me. Break of structure will go here. Immediately after this break of structure, this guy went up, bam, to create the retest. Immediately after the retest, the market will not successfully close above it. Then we keep seeing the downtrend coming down, down up to this point. And yet, at this point right now, this is where we expect to take. Normally, say we expect to take your profit at this first support line. You know, it's a downward direction. So this was where your take profit should be. This is where your take profit should be. You have taken profits here. Possibly your TP1 here, your TP2 here. I get me. So TP1, most times we may use TP1. So you have take profits here, and market keep going down to even hit TP2. Don't forget that the first support line in a downward trend will be your first take profit. The second support is your third take profit. The first support is your first take profit. The second support, your second take profit. The third of support, your third take profits. Do you get my point? So that's how we said take profits. So if you have hit target 1 year, target 2 years, before it now start retracing back up. So you can have take your profit at TP1 or close partial at TP1, then wait for the market to retrace back, or see the market retracing back up in the upward direction. So that's a practical live example for you. You can see that directly on this SL chart. There was a break of structure upward there. The market keep going up there, came back up. The market was in an uptrend, break the structure downward. I get with this red candlestick, then went for a retest with this other one here, was the retest he used. After the retest, market could not successfully close above. Assuming this market closed above, then this downtrend would have been invalidated, but it couldn't. At this resistance level, it couldn't. So it couldn't close above, it then came down, and we have the downtrend direction. So at times when you are setting, you also use your resistance and support so that you can have multiple area of confluence. So that's a practical term. So now let's look at SOL. If you want to trade SOL right here, what should you do? Okay, let's ask someone. Someone is asking now, sir. For instance, I want to trade SOL here. What should I do, sir? Already, we have what we have on SOL right now. Immediately after it hit our target 2 year, the market keep retracing back up. It's an uptrend right now. Then this guy came down to create a break of structure. There's already a break of structure here. What should you do before you enter? Wait for it to come back to this point, to this 193 for a retest. If it didn't close above this line after the retest, then you can enter. If it didn't close above, then you can short it down backward using this other support level as your stop loss, and the above here as your take profits. You know, you are shorting down, then this up here as your stop loss. Do you get my point? So the market currently right now, if you are entering right now as at this time, at this date right now, don't enter yet. Wait for it to come to this point. Market should come back here to 193 level for a retest. Are you getting me? Now look at the reaction after the retest. Is the market closing above or closing below? If it closes above, then that retest is invalidated. The downgrade is invalidated. But if it's closing below, then it's validated. Are you getting me? Then you can now enter and take your profit. So guys, that you can enter, set your take profit. And in this case right now, where will your take profit be? Let me ask you guys, where will your take profit be? Assuming the downtrend is validated after the retest, the market closed below, where will your take profits be? Press it down below at the comment section below. I'm going to reply you. Where will your take profits be? What will be your stop loss? I'm going to reply you in the comment section below to tell maybe you are right or you are wrong. So that's how we do this, guys, and it's been profitable over the years trading in this pattern. So let's go back to our chart and let's go back to our table. So now, for those of you who want to proceed further, these are the VIP offer for you guys as round of this live webinar today. For those of you who want to proceed further in learning more about trading, you want to know more about technical analysis, I have a technical analysis, machine technical analysis course for you, and this course is only for those who are serious minded. What I took you guys today was just, I don't know about it wasn't covered as a course, it was covered in between a topic. It was like a topic out of a subject in this master course, in this technical analysis course. I didn't take it as a topic on its own. I just took it. I think I was explaining maybe trend line analysis. That was when I mentioned the retest strategy. and break of structure. So if you are getting this course, you have a whole lot to learn. You can see learn about time frame analysis, how to use trading view, focus on candlestick, trend line analysis, Fibonacci analysis, geometric shape and pattern, forecasting measurement, ICT and SMC strategy, full guide on support and resistance, supply and demand, FBG, market structure, news, a whole lot to learn, a whole lot to learn. I can't even mention. And this course is just going for $100. $100. Initially it was going for $250, but we slide the price down to $100. So if you're getting this, you can get this right away. All you just need to right now is that go on my YouTube profile, you see my Telegram handle and my WhatsApp, and you can reach out to me on Telegram or WhatsApp directly and tell me screenshots, I'm getting this course. But if you're getting this course by watching this video and you have watched this point, then I should be able to give you something to thank you for watching to this point. And that shows that you are very serious and really want to learn. So I'm going to give you $20 off it. So you can get for $80. So all you need to do right now is screenshot. Have the screenshot of that says $80. I'm writing it $80. $80. If you can screenshot this right now where I wrote $80 on this right now, then you can get for $80. But if you can't have this screenshot, then that means you didn't watch this. But if you can watch this point, then screenshot this, come to my DM, send it to me, and I give for $80. For some of you say, sir, technology is hard, I'm not ready for it. I just want to learn, I just want to be giving me signals. I have an offer for you as well, guys. So let me show you the offer I have for you guys. I have an offer on my signal room, it's $50. It's going for $50. It will get sports signal, future trade signal, a whole lot of signals, as much as you can have to give you also. So if you are paying for this signal, you can get for $40. So screenshot this, the way this 40 on WhatsApp, on Telegram, so that I can have you get the discounts. And for some of you feel like, sir, I just want to learn the base of crypto trading. I don't know anything about crypto trading. I'm just a beginner, I'm just starting off. You can get our A to Z course also available for you. You can have everything here. Also, this one also, I'm going to give you a discount. Get for $40. So you are just getting it right now. Get for $40. Screenshot it. $40. You can get for $40. Maybe $10 as a giveaway for you. This way, you learn everything about crypto trading, spot trading, A to Z, fundamental analysis, a basic of technical analysis, how to buy and sell on DEX, on SEX, that's on centralized exchange, on decentralized exchange, how to get high-paying crypto jobs, a whole lot, everything about crypto trading, P2P trading, everything. You're going to learn it in this course. So guys, if you're interested in any of this offer, you can also check the description box below. There is also a link to our VIP booth that you can actually make use of. You're paying directly, and we all pay in the payment are made in dollars, but if you're paying from any other country, maybe from Nigeria, basically you can pay in naira, you can convert it to the current rate of dollar. So guys, thanks for joining this live webinar. I really appreciate it. Thank you so much. I love you guys, and God bless you. See you in our next live webinar next